What's up, traders? Welcome back to the Ticks and Trades channel, where one good level can change your whole day. And today we got more than one. It's Tuesday, June 10th, and the market gave us clean opportunities right off the daily levels. If you stuck to the base hit strategy, you had a high probability map and multiple chances to get in, get paid, and get out. Let's break it all down. So coming into the day, price had been holding above ES 6000 or SPY 600 overnight. The futures were keeping the bulls in control, at least on the surface. Today's game plan wasn't just about price, it was about timing as well. We noted a potential convergence of price and time. That kind of setup doesn't necessarily guarantee a trend change, but it definitely puts it on the table. So 600 remained the line in the sand. So if the bulls were to stay above, the grind higher probably continues. If they were to break below and hold, the bears might finally get their window of opportunity. There was no major data releases on the calendar scheduled, but we pointed out that geopolitics are getting spicy. If the market starts moving in weird ways, the media would probably retroactively blame it on external noise, but we're already looking under the hood because we know where the pivotal areas are. These are the levels on the 1-minute chart at 8:43 a.m. Eastern. And here we are at the end of the day. The first clean setup came mid-morning, right at 6:01:10. Spiked the level here. It was 9:54 or so. Spiked it by 3 cents, then dropped around 7 points or so. So a textbook base hit, precise entry, pretty tight risk, 4 points or more. Pretty easy to make that one count. The next trade was down at 599.65. That level acted as a trampoline. So a long trade there, launched price up about 30 points or so, almost over the next couple hours. And on their way up, they hit 601.10. Are we going to go short there? No, we've already done it back here. This is a good example that the first hit is the best hit. It went all the way up to 602.46. Pretty easy to see that that was a good short trade if you went short there for another base hit or more as it came all the way down to 601.10. Now, there was not quite enough time to take a recycle trade back here. So if you wanted to take it here, you just had to give it more time to develop. This little spike here did not happen in the futures, but eventually they gave you a base hit of 4 points or more. As you can see, they went up. No rules were broken as this trade developed. That's a long trade. Then they're back up to 602.46. And we're not going to go short again up here at 602.46 because, repeat after me, the first hit is the best hit right here. So 4 trades, all inside the structure of this strategy. If you stuck to the rules, there's no reason you couldn't have walked away with a day's pay or more in just a few hours. Here is a recording of a trade that I took. Just took one trade today, and it was not the short at 601.10. Kind of like yesterday, I had a meeting at 10 o'clock and just wasn't really sure about getting to the short. Wasn't sure how long it was going to take, but in hindsight, I really should have because it was a quick trade, as you know, just a couple minutes when they pulled back down. But I waited until it looked like they were going to get above this and trying to go higher, probably going up to 602.46. That was my initial thought. They did eventually. So what I did is jump on board when they got above, let's see, around 10:20, 10:30 or so. I was actually in the meeting. So maybe not the most responsible thing to do, but I thought I could just grab a couple, maybe 3 points or so. So I'm long 6 when it looked like they were going to go above. Kind of waited this thing out. Ended up taking 5 of these contracts off at a few points and tried to trail the remaining contract. And as it turned out, once they established some closes above here, they did shoot up, but ended up getting stopped out when they came back down. So it was kind of a little bit of a fake out this first time. And as you know already, since you've seen the entire day, they did end up going all the way up to the next level, but I just got a few points on that 6 contract trade on the long side. So that was it, and no more trades for me for the rest of the day. I just let it go just to have this recording to look at, but no more trades. And you can see here all the way to 4 o'clock. So the month of June has been pretty solid so far. This is the playing by the rules log, also known as the PBR log. No givebacks to the market so far in June, and some decent trading days at these levels. 16 S&P points today following the process. Here are all the levels hit in order. Over here on the Sam's Trades log, we have the scalp on the long side, just 3 points, but with 6 contracts, that put $900 in my pocket. So both the PBR, the playing by the rules, and my own trades are almost neck to neck in terms of the rate of return so far this year. Almost 98%. 95, 96%. So this is based on a $50,000 starting balance on January, I guess the 2nd of this year, trading 2 contracts at each level. Just curious if you know of any other investment instrument or strategy where you can reliably double your money within 1 year, much less a half a year. We're approaching 100%. There may be something out there, but I'm not aware of one other than what I've proven for myself trading the E-mini futures the way that I do. Did I mention that there's a course available that teaches how to find these levels and how to trade them? And if you don't want to do the analysis yourself each day before the market opens, you can just piggyback off of my levels. Subscribe to the daily levels thing. Basically, you'll get access to this before the opening bell. So along with these market recap videos, there should be enough intelligence in that whole package for you to emulate what I'm doing, if you're interested, that is. Okay, so where do we go from here? Back on the daily chart. SPY is staying above 600. We'll just go ahead and drop a line on the chart here. So although price has gotten above 600 since Friday several times, today was the first official close above it, first official daily close. The bulls still have control, but that price time convergence thing we talked about hasn't really passed yet. It's still active. Price is beginning to react more sharply at the levels, and that might mean something. Basically, the next longer-term destination, at least until some obvious resistance will likely be met, is up somewhere around maybe 608 or so. There could be some interim resistance areas on their way up if the bulls continue to grind, and that's if we don't get some type of black swan event or something that gets the bears to come out and drive price down. Anything can happen at any time in the market, but what we have in front of us is still bullish until further notice. You've got 600 as an access point and the trend line, so if you see price below that and hourly closes below 600 and certainly the trend line, that opens a door for a reset, likely down to 595, 596 or so, which could kind of be a last line of defense before this whole structure breaks. Not saying it's going to happen, just got to understand both sides. So to sum it up, today was a scalper's paradise. If you stayed sharp and followed the base hit strategy, 4 quality trades, plenty of room to get paid and log off early. If you like having these levels mapped out in advance and appreciate seeing them play out live, do me a favor and hit that like button and subscribe if you haven't already. I appreciate it. I'll see you tomorrow morning with fresh daily levels and another clean read on the market. Until then, trade well, and remember, base hits stack up over time. Have a great rest of your day.